I've been trading for now, um, for a while, probably like at least 8 years. For a while. Yeah, it's been a while. I don't remember how long it's been, but probably at least 2013, 2014. 2014, I want to say it. I can at least say that long, yeah. Something like that. But yeah, I think what I was saying was basically like you have those average ideas of support and resistance, right? Like, not to say that they won't hold, right? But price has those times where it dips below it, and I like to call these areas extreme areas. Like you just know that there's a lot of support and resistance, or there's a lot of liquidity in this area, money to be taken before price goes back to the upside and continues with everything that it was ultimately going to do. Same thing going on over here, where you have that support where price rejected before, price came back to that area, ultimately did reject it and go back to the upside. But while it was in that area, it was a really tricky and tough area for a lot of people. You have these areas of just general support and resistance, and not to say that price won't hold and reject it, but while it's in that area, it has a really tough time. And I can just see it's a tough time because when I see wicks, I know that a lot of people lose their money in the wicks, you know. When you have those high wicks, there's a lot of volatility that happened in that area. So basically you have, and the same thing with support and resistance. The general idea is to buy support, right, which is the floor, and sell resistance. So if you have a lot of people doing that, not to say it can't work if you're just doing proper risk to reward ratios and you know your numbers. But while price is in that area, it goes through that hard time, dips below, and I would call that basically an extreme area. One of the best places I'd say is to look for your trade idea, is on the other side of that liquidity, and then price like went back to the upside. Same thing right around here. You have the support, price dipped back in this area, caused a lot of like losses and just mixed ideas, given that price came into a lower low here, right? Red candle rejecting to the downside. A lot of people could have thought that as a sell idea. And then you have this bullish candle and, just giving people the idea that, okay, you know what, this area is holding. Let me add more sells or whatever the case. And then the higher time frame comes back in and pushes price to the upside. Yeah, so that's basically just to understand you have your roadmap, your support and resistance, and look for those best ideas where no matter how you're trading for liquidity, just what average people might be thinking, what is too obvious, and then what is too obvious, and then like the actual setup. And that's not even just in the markets, but I just apply that same idea to life. Like, you have good days and you have bad days, right? Those are like average. And then you have really good days, which are exceptional, and you have really bad days, which are also exceptional. So same thing applies to the market, where those really bad days in uptrends are your best opportunities, and like vice versa, the highs, extreme highs and stuff like that. Okay, yeah. So yeah, any other questions? Okay, yeah.
I do have one. I do have one before I start getting busy. I know you mentioned about the wicks and a lot of liquidity.
Yeah.
Won't you consider this like consolidating on the bigger time frame, like on the weekly?
Wait, what exactly?
That little part where you're seeing all the wicks.
Okay, yeah. So on the lower time frame, these are going to be consolidating like areas. Just same thing with any like group of candles, like in these indecision candles. I know in the lower time frame, the market is just like not moving much. It's just up and down in that little area. Same thing like with this one over here, while I'm just like, these candles show volatility. This long green candle shows volatility because at some point in time, this thing was super red and it came all the way down here, making a new low for one, right? And then at the end of the day, it still closed as a small green candle. So it just shows like, it gives me key information that this is a volatile area. One, the price, given the fact that it just rejected it, so just rejected it like that, but it made a new low, and that is just a what I'd call a tricky idea or just a false idea in the whole uptrend structure. I think this is important to explain, but like right here, we have a high that has been broken through, right, and came back down. I mentioned before that so liquidity is formed on both sides of the market. This is why it's important that you just have your higher time frame bias and you're going in that direction, because like you can take trends counter the trend, right? Like that is totally a possible thing. You have that option, but you decrease your chance of success simply because this is not in the actual trend of things, right? You're going against the river at that point. And example I give as well a lot. An example I give a lot as well is like the market when it's trending, it's like an ocean, right? It's kind of like really going in, sorry, not an ocean, like a river. It's going in one direction. But all the waves, all the little bits of water in that river is never just going downhill. It's never just going downstream. Some of those water bits, you know, go get tossed up in the air. Some crash against the edge. Some get tossed over onto the actual grass or the sand, whatever the case. So those are like those other trades that you end up taking where, you know, some of those trades aren't successful. You know, you'll go through, you take 3 trades, they're not successful, and then the market actually takes off into the direction that you were intending. Those things happen. That's why your risk management, your psychology need to be intact and in place, because you always need to be able to take a trade for the next day, right? You always need to be able to, you always just need to be able to survive the situation. You know, you can't be, your psychology needs to be intact to the degree where you're not just taking a loss and you're like, oh, damn, this don't work. I need to switch it up, whatever, you know? That's why I said before, like my test periods are more like a month. You know, sometimes I do them for 2 weeks as well, 2 weeks, 3 weeks, a month, whatever the case. But I'm just testing out, seeing what this does. How do I react to things? You know, like sometimes I think that like I want to do this in trading, like I'm going to take my trades at this point in time, but then me being out and about, just like living life, like I don't check my charts at this time, or, you know, I find myself slipping up. So I'm like, okay, let me adjust the plan to something I can work with, right? I always tell people, you know, if you work in your job and you, or whatever you have to do, you know, make sure you're putting trading at a comfortable time that you can actually get it done. Because if you're stressing out in trading, if you're, you know, you're taking your trades all emotional and stuff like that, you're not doing it right, and you're going to just stress the situation and and you're just going to end up taking trades for reasons outside of your plan, right? And even in the free trading package on the website, one of the last topics on there is journaling your trades. You know, take a picture of your trade, detail it if you want. I don't think you necessarily need to detail it because a lot of the trades are like, I take screenshots of on my phone and stuff. Like I kind of just have a good idea for why I was taking them. I remember like, okay, yeah, I took it because of that or whatever. But if you're not at that place yet, like I said about even just looking at the market structure without the zones on them, it's the same thing to just be like, write down what is your reason for taking this trade. How did I feel before getting in this trade, after the trade, and all those stuff. Because all those things are important information. How you feel, you know, whether you just got into an argument, whether you're sick, whether you're, all those things play a role into the psychology that you'll end up implementing into the charts as you do your thing. right? Because it's another way to put it. So let's go down like this. Let's just check out what's happening. So right now, like the market structure, this is a great example. You can see this would have been a loss, right? And it's that same idea that I was explaining before, where price goes up, clears the new high in that liquidity idea. Then you get the actual break of structure here in the new low. Then you're looking for those lows to come back in to the downside, right? To at least clear up back to this level. And you can see you also have support in this area as well. So you know you have liquidity there, right? Liquidity resting just below that area. What are some other things I believe? Yeah, so we talked about the levels. If I can just reiterate some things on patience, it's just like I always recommend going up into the higher time frames for your trading. I feel like that has been something that has really helped me increase my trading. And yeah, just that's something that's definitely helped me increase my trading and just my patience in general, just because like there's been a lot of times where I haven't had the patience to trade on the daily, you know, and I've just done it anyways, you know, just tried to be able to hold out and be like, you know what, for this plan that I'm testing out, I'm only taking trades from the daily time frame, you know, so you end up holding your trades longer, and you'll see, okay, if I'm trading the daily time frame, I might be holding my trades for a week, 2 weeks, 3 weeks, a month, whatever the case. But you test out your ideas, right? You test out your ideas and you see the results. Figure out what is the risk to return rate, right? What is the risk to rewards that you've been taking on your trades, and what is the win rate that you actually get back on these trades. Those two informations will tell you whether you need to increase your risk to reward ratios or you need to optimize your plan if your win rate is not to your liking, right? I say not to your liking, but then you have to also just remember that you just also have to remember what is realistic numbers. So a lot of people be going on the internet, you know, I got 100% hit rate, I got an 80% hit rate. But you have to look at the entire picture, right? More than a risk to reward rate, a win to loss ratio, like what is your win rate, isn't that important of information. What is most important is stuff like what is the actual risk that you're putting out, you know? How many pips you gain on a trade is not as important as compared to percentage. I'll also explain it to like percentage is just a better way to look at things rather than just numbers. You know, you buy a new iPhone, you think how many hours or what is the percentage that this is going to be out of my pay, you know, rather than this is $1,000, because $1,000 means different things to different people, right? So it's just to be thinking in terms of percentage. Okay, on this trade I'm risking 2%. On every trade I'm risking 2%, I'm risking 1%. And over the long run, if I'm risking one for 3, then I know my trade should end up being I have the potential to make 6% on every trade if you're risking 2%. You know, it's just to know the numbers. Really important stuff. Those two most important factors: psychology and risk management. And then you need to have an actual plan, right? These cannot be emotional based entries. You can't be, and some of the examples I give might seem ridiculous, but it's just on my own experience, you know, like I've had times where I'm like, you know what, I hang out with this person, all my trades are good, I'm gonna enter more trades and they end up not going good. So like those type of things are just learning experience. Journal your trades and you work from journaling your trades.